US markets overview. In this overview of the US markets, we're going to have this week the earnings from a few banks, Netflix, and some airlines. And a few economic reports will come out as well. That of the CPI, it will be out on Tuesday, and that of the housing starts, and the number to watch is the continuing claims for unemployment. And analysts have it that the market sentiment remain very positive. The earnings outcomes are expected to show a 40% decline. The forward-looking statements are expected to look bad, as we will all expect, and they assert that all of these bad news have been priced in, and that the fundamentals, as one would expect, are still looking backwards to what has already happened. But the market is looking forward. It's looking beyond this year now. It's looking at 2021. We're still in July. It's no longer looking at what's going on right now, and they expect that even the worst of results wouldn't really affect the expansion going on in the likes of the S&P 500 and the Nasdaq. So for the Nasdaq today, the 13th of July, they have the range to be between 3,173 to 3,210, and for the week, that is from today the 13th to the 17th of July, they have the range to be between 3,155 and 3,250. And then for the Nasdaq, the range for the week is 10,507 and 10,851. And already we're seeing in some of the futures in Europe that the Nasdaq is already. It may not be the Nasdaq. It may just be a few instruments that are issued in the market that are tracking U.S. tech stocks. That is already at 10,900 and some fraction. So that brings us to the stock in focus we have today. It was brought to our attention by this piece written on Schaefer Investment Research, and it says here, unpacking First Solar's options ahead of 2020 election. Alternative energy and solar power specialist First Solar has, like many, seen a rapid recovery since the broad market crash of early 2020. So much so that an interesting background of the recent rehabilitation and potential future outperformance on First Solar and the alternative energy sector came up in a Joe Biden portfolio done by Lisa Bielfos at Barron's. Keeping in mind Biden's presumed nomination for the Democratic Party's presidential ticket in November of this year, Bielfos noted a crossover between the former vice president's hands at improving the energy sector, noting the aforementioned improvement out of FSLR, with Biden's pledge to highlight the reversal of climate change and green energy. Head of U.S. policy research at Cornerstone Macro, Andy LaPerriere, says investors may want to allot 20% to the sector. Zoning in further on the stock, FSLR climbed all the way to $59.57 on Thursday's trading, a chip short from its February peak just below $60. In fact, Thursday's high is more than double the stock's March bottom, and now has the equity back above its year-to-date break-even level. Despite a stall near $48 last month, the stock has forged higher with the help of its formerly resistant 30-day moving average. Digging into the options, First Solar landed on Schaefer's senior quantitative analyst Rocky White's list of 20 stocks on the S&P 400 mid cap index that show the highest total options volume over the past 10 days, specifically 57,944 calls have crossed the tape compared to just 9,652 puts, and is more than double their expected rate. Okay, we're going to include this link for you to read up. So we're just going to come back here and see. This is the chart of First Solar. You can see it here, First Solar, and this is a chart that has a period of 10 minutes. You can see it says the M10. So, and this is what it looks like. This curve here is that of the 10-day moving average, and this is that of the 20-day, and this is that of the 30-day moving average. So based on what we have here, they are very much converged, and the price curve of First Solar is way above them. I wouldn't say way above, but above them. So let's do a daily chart and see what it looks like. So this is what a daily chart looks like. They are very much converged as well, and you can see it has started to depart from sometime last week, yes, and then probably the Thursday he spoke about it. It was probably before. This looks like 1 week even before that Thursday or thereabout. And then, but we have seen a steady. It's definitely showing an upward trend, and since March, you can see that, since even before okay, this is possibly, but maybe just right after the lockdown occurred, or just when it occurred, but it has continued to climb steadily up. There isn't even much sideways movement. Probably just in June, that's when more of that steady movement occurred. So coming back to some of the fundamentals we have here, this put call ratio that they have is that of probably very much of or rather the 30-day we're looking at right here rather sort of validates what they asserted and what they declared as they put forward the call volume in that piece we read over there. But the last trading day, which was Friday, the 10th of July, is indicating something much more, much different. We can see that the puts were not as poor as that piece indicated. If they have, going by this ratio of 0.7, let's look at it again. That this over this is definitely not going to give you a 0.7. It's definitely going to give you something less than that. So something's changed within that short space of time. And we have here a short percent of fluid as 14.11. It will take 8.3 days to cover all of that. So this is some of the things the fundamentals are saying. And then on the other thing, another metrics a few short sellers use, which are quite important. And it's the reason why they do that is because it's an acquirer's metric. The metric and an acquirer, somebody who's on the quest to acquire, probably has to consider, and amongst other things, so that is the enterprise value per revenue. So, and we're already determined the revenue to be for 2019 to be $3.1 billion, and we have the enterprise value as $5.1 billion. So that gives us an enterprise value per revenue of 1.65. So that will give you an idea whether the stock is overvalued, undervalued, and and stuff like that. So we have here the definition on Investopedia. It says the enterprise value to revenue multiple is a measure of the value of a stock that compares to a company's enterprise value to its revenue. EV/R is one of the several fundamental indicators that investors use to determine whether a stock is fairly priced. The EV/R multiple is also often used to determine a company's valuation in the case of a potential acquisition. It's also called the enterprise value to sale multiple. Key takeaways: a measure of the value of a stock that compares a company's enterprise value to its revenue, often used to determine a company's valuation in the case of a potential acquisition, can be used for companies that do not generate income or profits. So what else does he say here? And they have an example here where that value is 2.5. It also says somewhere that it's also good. It's good to compare also companies in the same sector as well. Okay. Thank you very much for watching this video, and it may interest you to sign up on our platform, Equity for Keeps. You can see what we're saying there. Your money is worth more than you think. If you sign up, register, you can begin with funds recall. You come here and you sign up, and when you've signed up, you tell us the people who benefited from the payments you've been making, payments like your rents and mortgages and all that stuff. And then we will go and negotiate with them to come and invest in the equity you will obtain when you register with us. When you register with us, we're giving up to 10,000 shares of our company, and very soon you're going to see more of that disclosure about what we're doing. And with the SEC, we're working on that disclosure, or that annual report. We're going to publish very soon, and we will notify you as well. Okay, sign up on our platform, support us on Patreon, on PayPal as well, and also feel free to also subscribe to our channel. Thank you very much.